Welcome back, everybody, to another market day. This is your designated Inquirer. My name is Axel, and it is 8/19/2020. Now, sometimes you guys may be asking, why do I wear these shirts? It's because it's what I like. And I learned a little later in life that I should wear what I want because it's what I want, not necessarily because it's what other people expect me to do. The reason I put out this content, the reason that I learned what I learned in my life, whether or not it was engineering, economics, my minor in art, any of those things, was because it was what ended up being what I wanted to do. I didn't go forth and do these things maybe initially because I felt like I had pressure to do these things, but later on in life I found out that I actually do enjoy these things. Pokemon is one of the things that I enjoy. Economics is one of the things that I enjoy. The stock market, trying to analyze it, trying to find out why, is one of the things that I enjoy. Running a small business is one of the things that I enjoy. Reselling things is one of the things that I enjoy. So, do things that you want. Find a way to make them happen. Find a way to make a life of things that you want to do. Your will is important. Your will is the way, and it'll help you find it. So be mindful of what you want, and be patient. Give yourself, manage the risk in order to give yourself as many chances as possible. But have at it. You can do it. Today we're going to be discussing what happened in the stock market today, what happened with the Fed minutes, what happened with NVDA reporting, and the general motion of the market. There isn't necessarily an indicator that happened today where I thought was key to understanding the movements of what happened in the stock market, so I'm not necessarily going to go over any particular indicator. So let's go through it. One, NVIDIA over the past few days, this is NVIDIA, this is the NVDA stock, it hit its 52-week high, but also, as we saw a couple days ago, basically it's all-time, right? Since forever ago, since at least 20 years ago, it's never been this high. Today, it did not report up to the expectations that was set in front of it, which the market in and of itself created. So it's not necessarily NVIDIA's fault, but the price that it reached before reporting was high enough to demand results that, well, NVIDIA was not able to meet. Unfortunately, even though it beat quote-unquote the expectations of analysts, the expectations of the traders is a completely different animal. The expectation was that it would hit, on average, the expectation was that it would hit $1.63 in terms of earnings per share. It beat that by providing $2.18 per share in terms of earnings. But apparently, considering the run-up, it was expecting something a lot higher than that, or else it would not have gone down. So, considering where the expectations of traders were, there probably wasn't a whole lot that NVIDIA could have done as a company to actually meet those expectations. It became unrealistic, basically. And kind of like what we've been talking about with the greater market in general, what traders are expecting the general economy to be able to provide within the next 6 to 18 months in terms of productivity and growth, they're probably not going to see it. We kind of saw that today also in terms of what the general market was doing. So if we go over to NQ, we can see a little better as in terms of like what we mean by that. Today, at the open, it tried to move down to hit, basically to find some sort of resistance, which it did, and or support, and it moved up higher, ended up hitting basically another 52-week high, and also another highest point ever in its history. But the fact is, around here, this is when the calculus kind of changed. And that calculus was in terms of what they could realistically expect in the next 6 to 18 months worth in the economy. And the news that came out in this area right here was actually the Fed minutes. The Fed minutes is like we had spoken about before, that every month and every few weeks the Fed gets together, the Fed being the Fed chairs of every respective banking sector of the United States. They pick a president of the specific sector of the United States, whether or not it's the West, the Northeast, etc. There's a few different ones, a few different Fed chiefs is what they call them. They get together, and then the Fed president conveys the Fed minutes, especially effectively what was discussed. Now, the Fed minutes were released today and put out basically the information that they all discussed, and also released what the market probably reacted to more today was what the Fed staff, the analysts and the number crunchers, basically the nerds, in terms of what their expectation and updated forecasts were for the third quarter, for the fourth quarter, and further on, basically for the economy as to how it was going to be doing for the rest of the year. What they found out is that they had to start to reduce the forecast for what the economy was expected to put out. So their forecasts now are starting to shift, but lower, given the information that they're now receiving, including the high frequency data like credit card statements, credit reports, whether or not people are reserving tables at restaurants, a lot of that type of information that banks, credit cards, and other financial entities release on a daily basis, if you know where to look. So given all that information, this is where the market, before this, kind of acted differently to a certain extent. This was a pretty large divergence in terms of volume, in terms of overall movement, in terms of total movement, and it marked a significant shift in trading behavior. Now, all the way up until the close, it basically went further down, up until the close, which was 1300 right here. And it basically created the now downward momentum that we see right now, which is basically creating a low, a lower high, and now a lower low. Generally throughout the night, etc., we're probably going to be seeing, we'll see how the rest of the world takes this information moving forward in terms of how they think the NASDAQ in particular is going to be doing. And so they're going to be making their market actions, whether or not they're going to sell, buy, hold, etc. But we'll see whether or not they start to break significant support lines, moving lower, or whether they believe that the market can somehow keep going up. I don't believe that, but yeah, so that's where we stand right now. After the market closed, the movement lower from just the close is probably reflecting a little bit about what NVDA and how it reported, and we know that may be affecting other stocks as well. Let's take a look at Apple real fast and see how it reacted after hours. It's basically a little bit lower from where it closed, but we'll see how the rest of the world takes this information and what it's gonna do about it. Let's go back to NVDA real fast. NVDA. We're gonna go here. We're gonna take a look at basically what the swing was. Now, from the top, we're going to take a look at that as a number. That number is about 5%. Okay, so from the top, we've retraced 5%. From the close, we've traced back 2%. So it's a 2% reduction from the close. Considering that this is close to the all-time highs, this 5% and this 2% mean a lot more than moving up. Because even if you were to move up the same percentage, it's not the same percent. Because if you move up the same percent, it's moving up 3% versus moving down. Okay, here it is the same. Let's see. Generally, when you move down from somewhere, let's take a look right here real quick. Yeah, okay. Okay, so this is what I mean real quick. Alright, so when you move down from somewhere, you get a certain percentage. When you move up from the same point, up to the same point, basically, it is a different percentage, because it is a larger percentage to move up from a point than it is to move down from a point. Because the amount of the hole, which is further down, basically, from this level down, the percent to move up that amount is bigger than the chunk of stuff to move down to that same point. That's why always moving up is going to seem like a larger percentage than the chunk to move down. So this 3 or this 5/2% actually means a lot more going down than when you move up. So sometimes percentages can be deceiving. So keep that in mind when you're looking at like whether or not something went up and or down over the course of a day, months, etc. Yeah, that's important. Okay. Now let's add in our indicators here. Let's see where it's at. Now, from looking at the volume weighted price, we see that there's a major point of support and a major level up here, which is why basically it hung out around this level for a good chunk of the day, up until where sentiment shifted and new information changed, basically the outlook in terms of what the company could do. If we go to 2 hours here, we can see here where the stock is likely to move and where it has moved in the past. So it can more than likely move between here and tomorrow down to here, and depending on how far it moves, it can possibly move down to here. What does that mean? It means that it can move from the high. It can retrace possibly 10% by tomorrow, maybe. It can retrace 7% from tomorrow, or it can retrace up to 16% over the course of a few weeks. So that's a pretty significant move, considering that it's already retraced a pretty significant amount. It's already, like I said, it's already retraced 5.4%. Now let's see here. Let's go back to NQ. The NASDAQ. Take a look and see here. Now the predominant level in which this can be is still lower, and the level below that is here. The retracement from its high is less. from the top, we're only 1% away from the top. To this level, we're about 3%, and to this level, we're about 7%. So it's got quite a ways to move. But considering that that momentum is starting to shift down, that it was overbought, that to the movement up, it has basically seen lower volume, and to a movement down, it saw higher volume. If we take a look at the daily chart right here, yeah, we basically see that on a move down, it basically experienced higher volume than on a move up. So more than likely, it's going to continue. More than likely, statistically speaking only, that it can possibly move lower. Again, every day I'm probably going to be saying the same thing because I believe that is right. That I am not a financial advisor. I'm not licensed in the state of California or anywhere in the United States to be a financial advisor. Do not take your advice from me. What I say and how I go about presenting my information is simply an opinion to the best of my ability. I'm only synthesizing information and putting it out. Do not take my predictions and or how I go about synthesizing information as a recommendation. These are not recommendations by which you should take an action for your portfolio. Please do your own research. Please seek out financial advice from your financial advisor. Okay. Now, I believe that's okay. Now let's talk about what the Fed was that everything that had to do with the Fed? I believe so. Yeah. I think that was pretty much everything. Recently, Bitcoin has also been moving lower. Its previous high was basically 2 days ago at 12,635. It is currently at 11,760. So that's a decent move lower. It has not maintained this 12,000 level. Gold has moved down precipitously also. It's still above its previous 20-year high. It reached 2,024 per ounce and is currently at $1,941 per ounce. So still significantly higher than its previous 20-year high, but it's still lower than its now all-time high. The VIX moved higher and stayed higher from its low, which it reached today at 21 basically. It was but generally about 21-27. That was the general level that it reached before moving up higher to 22.54. We'll see if it can get over 23.55 tomorrow. And if the trend continues into a more volatile market coming into the next couple months toward the election. Apart from that, that has been your market day. I hope you guys are well. I hope you guys are safe. And until next time, I'll see you guys later. Bye.